All right, hello everyone. Testing 1 2 3. Testing 1 2 3. Quick audio visual check. Type a 3 in the chat if you can hear me and see my screen, please. Type a 3 in the chat if you can hear me and see my screen. All right, thanks Terry, Bill, Larson, Dan, David, Wendy. Perfect. All right, so I think we're good to go here. Welcome. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader. Looks like our audio and visuals are clear to move ahead. So I appreciate everybody taking time today. I know we're about a minute or so past the hour, but thanks a lot for taking time out of your day, attending this presentation. We're going to keep it short and sweet, about 60 minutes or so. I want to encourage you to stay around to the end. I'm going to show you some really awesome stuff. We'll take a look at the markets today. We'll look at what happened today. We'll look at current setups, typing symbols, all kinds of good stuff. So I do encourage you to stick around and also ask all the questions that you wish. I will probably not answer those during the presentation. I want to make sure I get through the meat of things here, but I will come back and answer those at the end of the presentation. So ask away. Excuse me, and we'll look at your questions and we'll dive into the market. So first off, is this everybody's first time? Have you been here? Have you seen this presentation before? Is this your first time? Let me know here. And while you're doing that, we'll start here with our risk disclaimer as required by the regulatory governing bodies and our attorneys. Past performance is not necessary to give indicative of future results. There's substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So, i.e., in short, what that means, don't trade with your rent money, your mortgage money, your milk money, your child's educational funds. You can lose money in trading. So let's see here. We got pretty much everybody's first time. So welcome. I think you'll be in for a treat. And this really is my favorite strategy, my bread and butter strategy. It's what I've been using for close to 15 years. And I'll show you why, because it actually works. So I'm very excited to get to that part of it. Let me introduce myself once again. My name is Silas Peters. I'm a proud husband, also father to these beautiful blonde hair beauties here in front of my alma mater at the University of Alabama in Tuscaloosa. And here are just some screenshots of my family and I just kind of getting outside, getting some fresh air, trying to avoid the corona conundrum. You see my girls down there actually made some homemade masks. They didn't make me any, but now it's a statewide mandate. So we did have to go actually buy some. But anyway, just to show you that I'm a human being and do like hanging out with my family when time permits, but time is certainly of the essence right now. It's 3 days after I graduated the University of Alabama. I sold my car, I packed up my small belongings, and I actually drove north, headed straight north to the great city of Chicago, the old Windy City. It's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And I was bitten by the trading bug and never, ever have really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spec traders, and the like. Also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office, sales, and support. Also worked as a private family office investment consultant. I hold or I have held these various futures and securities licenses. And in 2016, I launched Seasonal Swing Trader. Then also here in 2020, I am a partner and co-founder of a registered investment advisory, Blue Marlin Advisors. So we're really excited about things to come there. But my journey as a trader, it wasn't always easy. In fact, there was a learning curve. Several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School does not teach real life experience in the markets. I'm sure some of you can attest to that. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that I was, but ignorance and greed cost me my profits. I blew up an account, and then I blew up several others, and what I like to call revenge trading. Again, I'm sure some of you are familiar with revenge trading. If you're not, congratulations to you. Finally went back to my roots, settled down, worked my process, and found overall consistency. But enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? I certainly hope it doesn't. This is actually not my trading desk. This is a poor humor. I found this on the internet. I thought it was funny at the time because I feel like this is the perception of what those on the outside looking in at us traders think this is what our desks look like this. So we have all these monitors and we've got these lines and colors, and numbers blinking all over the place. Certainly not the case. Now, my desk did look like this in Chicago for obvious reasons, but I've since pared back to a handful of screens for my charts, my quotes, my order entry platforms, and internet for day-to-day operations. But all this does is harm your eyeballs, and most importantly, it leads us to this paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm raising my virtual hand here. I've been there, done that, got the t-shirt, and trust me, it's no fun. But per Wikipedia, it's a state of overanalyzing or overthinking a situation so a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the analysis they thought they could possibly do? They've crossed that T, dotted that I, they get ready to put their finger on the mouse, pull the trigger, and then what happens? This line crossed that line, or this negated that. Yeah, so a lot of you are. Hopefully we're here to kick those paralysis analysis demons to the curb. So I appreciate everybody's interaction so far. I like to see who I'm talking to, what type of crowd. What do you trade? Type in the chat if you don't mind. Do you trade stocks, options, futures, Forex, maybe even cryptocurrency? I trade all these actively, stocks, options, futures, and Forex, with the exception of crypto. Do not trade those actively. I do have accounts across the internet. Honestly, I don't even know if I remember how to get into half the damn things, but I view it more as a lottery ticket, really, if anything. But I do trade these others on an active basis. So let's see. We've got right off the get-go, we got a lot of options traders. That's pretty cool. Futures and Forex, stocks, ETFs, and options. All the above, futures and SPY options, stocks and options. Yeah, stocks and options usually single-handedly get the majority there, and most of the time I ask, but then followed by futures and Forex, and occasionally we'll get a crazy cryptocurrency trader out there. So the good news is it works in all those markets. It's highly accurate. It's profitable, works in all time frames, and it's 99% mechanical. Most importantly, it's simple. So that is going to be kind of the theme. We're here to keep things simple. We're not here to teach rocket surgery today. So my agenda and promise to you is we're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to stop and ask you, have I fulfilled my promise? And I hope to see a lot of yeses. All right. So speaking of promises, if you're here today, you may have seen or read something about the $10,000 trade promise. Full disclaimer, I'm not going to promise you anything in trading or in life, but these were trade setups that we talked about in multiple free presentations, such as this one. This is an example here in crude oil, this one on RBOB unleaded gas. We also had one in natural gas. We talked about a potential $10,000 trade setup looming on those three markets. And what happened? The setup, the one that you're about to learn here in just a few moments, they triggered and went on and met their $10,000 profit objective and then some. We also talked about sleeper markets. Here you can see we've got coffee and OJ. You see from a 5, 15, and 30-year historical price perspective that the markets tended to bottom out at this particular time of the year, and that's exactly what they were doing. Does that mean that we said go get long or bought call options or call spreads or sold put options? No. We said sit on your hands, wait patiently for this very specific setup that you're about to learn, occur, and trigger, and that's exactly what they did. They went on and met their $6,000, $7,000, $8,000 per contract price objective. We also talked about sleeper markets in corn, soybeans, and wheat. This is in corn and beans. You can see it from a 5, 15, 30 historical price perspective. The markets tended to get quiet or bottom out at this particular time of the year. That's exactly what they were doing. The markets were getting very quiet, the market participants were almost being lulled to sleep by the favorable weather conditions out in the Midwest and so on. Does that mean that we went and bought corn and soybean call options, went long the contract, sold put spreads? No. So sit on your hands, wait patiently for the setup to occur, and that's exactly what happened. They went on, met their $5,000, $6,000, and $7,000 per contract price objective. So this presentation today is not all about futures or commodities. This is just showing you some examples about trade setups that were shared in multiple free presentations that occur literally over and over again every day, regardless of the market or time frame. And I'm gonna prove it to you. So who here is ready to see the setup responsible for these very recent trades? This is 800 S&P points. This is 160 points in cocoa futures. This is 300 pips in the Aussie Kiwi, and this is $40 or two $20 trade setups in Facebook. So who here is ready to see this setup? All right, absolutely, of course you are. Seeing a lot of yeses. Fired up, let's go. Drum roll, please. It is the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. So who here is familiar with the 1, 2, 3? I would suspect that 99.8% of you are. I didn't invent it. This is one of the most fundamental technical patterns in the textbooks, but highly, and I mean highly, overlooked by most traders. So let me see where you are here. I want to know who is already familiar with it, and at the end you're going to go, oh my, why am I not using it? So pretty much, yeah, everybody, yeah, I don't get into the whole Elliott wave thing, but some people compare it to Elliott wave or ABC. It's absolutely right. So yeah, and then I've got to know here or there, and that's awesome because you're going to see something really simple. All right, let's talk about it. The setup is price action based. The pattern is comprised of a low, and then a higher high and a higher low, and a break of that higher high in the case that we're going long. Same rules apply if it inverse is short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. Strategy, it usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. I will stress that it also works extremely well when the pattern sets up at significant areas of support and resistance. Other high probability technical patterns such as head and shoulders tops and bottoms, double tops, double bottoms, etc. So you may argue, or when you see the examples, you'll say, hey, isn't this a counter trend strategy or a reversal type strategy? And in essence it is, but we'll talk about ways that we can help put the odds even more in our favor. Let's take a look at this 1, 2, 3 top strategy. Don't worry about what market this is or what time frame. This could be the 30-year bond, it could be Caterpillar, it could be the Aussie versus the Canadian dollar. It doesn't really matter. We're learning basic principles and mechanics. So here we have point 1. It's when we find the highest peak and find resistance and then move back down. That gives us our number 1 point to work off of. Market trades lower and then pulls back up, giving us our 1, 2. Market retraces higher, and once we pull back, that gives us our 3, 1, 2, 3. Now to find this 3, the market could have retraced up here, or even up here, as long as we don't take out that number 1 high. We have a 1, 2, 3. Now as a 1, 2, 3 top trader, we know we're looking to get short on breaks or closes below the number 2, which is what we got right here. Let's take a look at the 1, 2, 3 bottom. Same rules would apply as you would suspect, but only in inverse. So here we have the lowest low when we find support here, which are number 1. Market trades higher, pulls back, giving us our number 2. We have a 1, 2, 3. Again, the market could have traded down here or down here, as long as we don't take out that number 1 low. We have a 1, 2, 3. Now for a 1, 2, 3 bottom trader, we know that we're looking to get long on breaks or closes below above the number 2. We don't know what happened in this example, but that's what we know we would be looking to do. Let's look at some real chart examples. We're gonna start here with the 1, 2, 3 top. Now I'll let you guys and gals read this text over here on the right. I'm gonna look at the chart and read from the chart. So on this example and the subsequent examples, we're going to be looking at a 52-week high or 52-week low. That's not an absolute rule, nothing set in stone, but those are going to give you your higher probability setups. We'll talk about ways later that you can dial it in tighter, say every 6 months or every 90 days, depending on the frequency that you want to see these. So here we have a red #1 circle. Why? Because it's a 52-week high. This is a daily chart of the Aussie dollar, the 6A. If you don't trade futures, you could look at the ETF FXA that tracks the Aussie. Or if you're a Forex trader, you could look at the Aussie US. You're going to see the exact same pattern setup regardless of the instrument. So here we have a #1 high. Market pulls down, trades back up, giving us a 1, 2. Market only retraces higher by about 4 bars here. Could have come up here, or even up here, as long as we don't take out that #1 high. We have a 1, 2, 3. Now for a 1, 2, 3 top, we know what? That we're looking to get short on breaks below the #2, breaks or closes below the #2. So you say, Silas, I already know the pattern, the strategy. That's it, I'm done. But what about the other important ingredients of the recipe? Like, where do I put my risk or my stop? What about my target profit levels? All very important things we need to know. So our initial risk will be above the high of the #1. Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So we measure from here to here, and then we measure down. It's about 225 ticks or $2,200 per contract in this example. So you'll notice that yes, it is off the bat a 1-to-1 risk reward ratio, but we're going to talk about ways, show you some examples how you can quickly cut that risk very quickly. It's very important to allow the market to materialize in your anticipated direction, which it does more often than not, and then adjust your stops accordingly based on your particular style of trading. So once we start breaking down and making lows, in this example, what would be the next logical area to place your stop or your risk? I would say it would be the next area of resistance, which is the high of the #3. So once we start breaking down and it's moving in our favor, we can quickly adjust this risk from here down to here and trail the market. Okay, so we quickly cut our risk by 50, 60, or even 70%. Let's look at a 1, 2, 3 top here on Walmart. Daily chart of WMT. We have a red #1 circle. Why? It's a 52-week high. We have 1, 2, 3. We know days in advance what 99% of other traders are struggling with. Well, where am I going to get in? Where am I putting my stops? Where am I putting my targets? We know that days in advance. We know that we're looking to get short on breaks or closes below the #2. We know that our initial risk is above the high of the 1, and we know our initial target is the distance between the high of the 1 measured to the low of the 2, and then down. It's about $5 in this example. Let's look at some 1, 2, 3 bottom examples. This is a 15-minute chart of the E-mini S&P. Now on an intraday chart, whether it's a tick, 1 minute, 5 minute, 15, etc., we're not going to be looking for 52-week highs or 52-week lows. It wouldn't make much sense. So on an intraday chart, we're looking for what we call session lows or session highs. Let me tell you how I define a session low or session high. We know that the futures and Forex markets typically trade around the clock, opening up on Sunday afternoons, trading to the Asian session, to European session, to New York session, shutting down for about an hour, reopening, rinse and repeat through Friday afternoon. Now, wherever you start your trading day, I start mine around 6 a.m. Central, I'm only looking for new highs or new lows from that point forward. So if you're starting your trading day in, say, the 3 a.m. Central European session, or maybe it's the New York lunch hour, or maybe it's the last hour of the trading day, or maybe it's the start of the Asian session, you're looking for new highs or new lows, okay? So here we have a new low as indicated by the red #1 circle. We have a 1, 2, 3. Aggressive traders would be looking to get long on the initial break above the #2. So you're working a buy stop, maybe a tick or two above that #2 high. You're triggered into the trade. Now, a couple of alternative entry methods that I prefer are either to wait for the market to come back and retest the #2 breakout area, or 2, wait for the market to come up and hook back up and through that number 2 area. So utilizing one of those entry methods, one of two things are going to happen. One, you're going to miss out on some potentially winning trades. Sometimes the market will bust up out of that number 2 breakout area and zip up and hit your profit targets, leaving you at the trade station or train station. No need to get your feelings hurt. There's plenty of other markets and other time frames to look at. So what is the other alternative scenario? Sometimes the market will bust up, trigger you long, and then roll back down and stop you out. So if you wait for this method to either come back and retest, which it does more often than not, or come down and put back up and through, giving you that second entry confirmation, that's going to keep you out of potentially false breakouts or losing trades. Okay? And it's all a matter of preference and style of trading and what time frames you're trading on. Let's look at a 1, 2, 3 bottom on a weekly chart of Apple. Hell of a way to catch some longer term position type moves here. We have a multi-week low, 1, 2, 3. We also have a high probability double bottom. The market triggers long here or breaks above the number 2 on this large bullish candle. And then we trade sideways for a few weeks. Market comes back down and retests and or hooks back up. That's our confirmation to get long Apple. How? We buy Apple stock, we buy call options, call spreads, sell out of the money, put credit spreads, whatever your flavor or style of trading may be. So look at failed trades. They don't all work. There's no holy grail. We're all big boys and girls here. We already know that. I like this trade. I probably took it in my live account. We have a large sloping uptrend here. The market's roaring higher. We have a trend line break. We also have a 1, 2, 3. You're either getting short here on this initial breakout below the number 2, or if you wait for that hook method, the market trades down and then back up and then hooks back down, you're into the trade here. You're up by maybe, I don't know, 1 or 2 points. And if you exercise any type of money management, you're stopped out here above the high of the number 3. If you didn't do anything, then you're stopped out here at your initial risk level above the number 1 high. But look what happens here. We get a new number 1 high. This high is greater than that high. So we get a new 1, 2, 3 top count. Market breaks down, gives you a retest, ends up being a profitable trade. This is what I call a no trigger trade or a voided trade. It's neither good, bad, nor ugly. It is what it is. So what we have here is we have a 1, 2, 3. We're looking to get long on breaks above the number 2, but what happens? Market breaks down, takes out this number 1 low. So we start the count over, it voids this trade. 1, 2, 3, looking to get long above the high of the number 2. Market breaks down, takes out the number 1 low. We start the count over. 1, 2, 3. Market finally breaks above the number 2 here, and we're triggered into the trade. Now, does anybody know, or can you tell me why I like it when this happens? Anybody tell me why I like when this situation happens? And I'll answer you guys' questions too here at the end. All right, so what we've got going on is we likely have some type of divergence. So we're making new price action lows, low, lower low, lower low, but we're likely also making some type of divergence. Exactly. David says third time a charm. So both of those answers are probably correct. So we're having new lows, but whatever your favorite momentum oscillator is, whether it's RSI, stochastics, MACD, doesn't really matter. We're making higher lows, or i.e. no lower lows on that oscillator, right? So when I see that, that's just another one of those things that I like to see to help put the odds in our favor. And I'll show you some examples later. Let's talk about the 1, 2, 3 pattern trade management. Again, the confirmation of entries is on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies. If you're only trading one contract, whether it's one futures contract, one option contract, one Forex, or maybe one share of stock, I would say, look, go for the distance between the 1 and 2 points. Uncanny how more often than not it will go tag that, often to a tick, and then reverse. And I'll show you some examples on that as well. So, but if you're able to trade multiple contracts, which is what we all strive to do, you have that flexibility to scale in and out, I would say exit a third, 2/3, half your position at that distance between the 1 and 2, and then trail your balance, trail your stops based on whatever trailing stop methodology that you use. Nobody can tell you how to manage your position. I like to use good old-fashioned support resistance levels, price structure, also using Fibonacci numbers, but there are 2 to 3 bar candle stops, moving averages, Parsar numbers. You have to find out what works best for you. So I've shared with you that this setup works on any market, whether you trade pips in Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. And on any time frame, whether you trade tick, 15, hourly, 4-hour, daily, and more, and on any trading style. Are you a position trader, a swing trader, a day trader, scalper? I'm gonna take a swig of water here. Tell me what your trading style is. All right, so we've got tick trader, day and swing. A lot of swings kind of piling in here. Yep, get in, get out. What markets are you scalping on, if you don't mind me asking? Excuse me. Weekly options. Scalping the ES. That's great. I mean, that's what makes the market. Everybody's trading different styles. And my point of that slide was you've got to find out what your bread and butter is. For me, I like to trade the 5 and 10 minute on the S&P, crude oil, 30-year bond occasionally, currency futures, the hourly and 4-hour to swing trade currency futures, FX, a handful of commodities, and then the daily for all markets. Equities, equity options, ETFs, indices, commodities, FX. That's where I got started in my trading journey, is just looking at end-of-day charts. And it's probably the best thing that could have ever happened for me. But you've got to find out what works best for you and your personal situation. So you've seen the proof. Let's look at some real trade examples. Not to say that what we just talked about were fake examples, but let's talk about some trade examples we've utilized in some of our services. First market here is crude oil. Everybody loves crude oil, loves to talk about it. If you don't trade it, I can guarantee you watch it, or you know what the price is, or you've heard about it. Whether you trade CL crude futures, USO ETF, or other leverage crude or energy ETFs, or other energy stocks or markets, okay? So again, I'm gonna work myself from left to right here on the chart, and you can read the text over here on the right. So here we have, in this first example, we have a number 1. Why? It's a 52-week high. We have a 1, 2, 3. It's a smaller 1, 2, 3 nonetheless, but it's still valid. And we know immediately what? We know where our entry is, we know where our risk is, and we know where our target is. We're looking to get short on breaks or closes below the number 2. We know our initial risk is above the high of the 1, and we know our target, our initial target, is the distance between the high of the 1 and to the low of the 2 measured down, or about $3 or $3,000 per contract in this example. You can see that the market trades down, retests the number 2 breakout area, a few bars, and then trades down and meets our profit objective. So then what happens? The market goes into sideways or consolidation mode, and that's fine. I get asked all the time, does it work in sideways or range-bound markets? Well, theoretically it should, yes, because we're only looking for new highs or new lows. But if you want to trade range-bound 1, 2, 3s, by all means, help yourself. You can certainly do that. Here's a potential 1, 2, 3 bottom in this range. Triggers high, ends up being a nice trade. But I'm only looking for new highs or new lows. And we get a new high. This high is greater than that high, so it's a new number one point. So we have a 1, 2, 3. Let me tell you why I got excited about this setup. Well, one, because of the high probability nature of the 1, 2, 3 pattern. Secondly, we're at a time of the year from a seasonal perspective where crude and energy markets in general typically trade to the downside. So when we have those two things line up, it's what I call the perfect marriage in trading. So we got short here. How? We sold crude futures. We sold call credit spreads. We bought puts and put spreads, traded USO and other leveraged ETFs, quickly met our $4 or $4,000 per contract price objective. And then the market moved down another $20,000 per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it. And all we did is we trailed the market until we either got a reversal or we got stopped out. So the market was coming down. We had a potential reversal here, a potential 1, 2, 3 bottom. With the market flush lower, we had a potential 1, 2, 3 bottom here. Also, my second favorite technical pattern, which is a triangle. It doesn't get any cleaner than that. Here we have a triangle right here. We would be looking to get long on breaks above the number 2, breaks or closes above the number 2. But what happened? Market traded to the downside of that triangle, as it should in its anticipated downtrend, and sold off another $10 or $10,000 per contract. We finally got this one flush down low over here, one last bottom, 1, 2, 3. Market broke above the number 2, met our $5 or $5,000 per contract price objective. So I want you to remember this chart and the subsequent charts because I'm going to show you something really special. Here is a daily chart of gold. This is actually GLD, the ETF that tracks gold. I like to use the futures or commodity charts because it's a lot cleaner, a lot more fluid. You're not going to see the gaps. But if you want to use the ETF, that's perfectly fine. Again, you're going to see the same setup. So here we have a 1, 2, 3. Market breaks down below the number 2, retest a couple times, sells off, reaches $4 profit objective. Then we have a new bottom, 1, 2, 3, also a double bottom. Market trades higher, retests, hits its $2 profit objective. Then we go kind of sideways, similar to that crude example right here. We have a potential 1, 2, 3 bottom here, potential 1, 2, 3 top here, but I'm only looking for new highs or new lows. And we start to get those. These lows are taking out these lows. So we're getting new number 1 prints. Potential 1, potential 1, potential 1, potential 1. Here's a 1, 2, 3. Uh-oh, the market gaps down, takes out that number 1 low. No worries. We start to count over. 1, 2, 3. Market finally gaps above the number 2 here. Boom, boom. Goes back and retest. Looks back above. Also get a trend line retest. That's our signal to get long. How? We buy gold, buy GLD, gold call options, call spreads, sell out of money, put spreads. Ray says no sound. Can I get a quick audio check? Hopefully this hasn't been going on for some time and I'm not talking into a black hole. Can I get a audio check, please? All right, thanks guys. Let me tell Mr. Ray to refresh. All right, audio's good. I'm gonna keep chucking along here, keep rocking and rolling. All right. So let's look at another example. Delta Airlines is probably becoming redundant by now, but I'm just trying to hit home the fact about how frequent these occur on any market, literally any market. So here's Delta Airlines, 1, 2, 3 bottom, gaps up, comes back and retests, $4 plus. Here's a 1, 2, 3 top. This one gaps down below the number 2. I don't really trade those gaps. I've got members and students that will trade all of these, so they're aggressively buying put options, selling stock. I like to wait for the retest or that hook back above. We get another shot here. This high is greater than that high. 1, 2, 3. Market sells down hard below the number 2. We get a small retest here, trades $8 plus, and we get a 1, 2, 3 down here, trades higher and favorable, comes back down, retests, and then ends up making an $8 plus move. All right, for the Forex traders, this is a 4-hour chart of the CAD Swissy, Canadian dollar versus the Swiss franc. And we have a 1, 2, 3 bottom, also have a double bottom right here. Again, the aggressive traders are getting long on this initial breakout, or if you wait for that retest and or hook back above, you're getting long here. And then we hit our 70 pip profit objective, and then we wait for the 1, 2, 3 top. So here we have a potential 1, 2, nope, 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 1, 2. Finally get a 1, 2, 3 top here, breaks down, trades sideways, hits our 40 pip profit objective. Then I get asked, fine, does it work on an intraday chart? Of course it does. This is a 5-minute chart of the NASDAQ. You could be trading the mini NASDAQ or even the micro NASDAQ at 1/10 the size. 1, 2, 3. Market breaks above, hooks back above, hits your 13-point profit objective. Here we have a 1, 2, 3. Market breaks down, trades sideways for a few bars, gives us a little heartburn, finally sells off, hits our 20-point profit objective. Here we have a new low. It's probably the last hour of the day. 1, 2, 3. Market breaks above that 2. If you're lucky enough to get long on that retest here, you're filled on your 30-point profit objective in about 2 bars. All right. So why are you here? You're here to learn my mechanical done-for-you strategy for all markets and all time frames. This is the part of the presentation where I ask you, have I fulfilled my promise up to this point? I'm going to take another swig of water here. Have I fulfilled my promise up to this point? And if you type no, I'll boot you out. I'm just kidding. If you want to type no, you have to at least tell me why. All right, thanks. All right, thank you for the kind words. Yep. But wait, there's more. You knew it was coming. A couple of you already called it. Get to the secret sauce. What if this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be amazing. So do you remember the chart examples that we just talked about, literally just 2 or 3 minutes ago? Hope you do, because this is what it looks like. This is that same chart of crude oil that we just talked about, the daily chart of CL or crude. And let's talk about what's going on here on this chart. You're smart people, you probably already figured it out. Let's talk about what these arrows and these colors and these lines mean. The green arrow is your number 1. The red arrow is your number 2. Your blue arrow is your number 3. 1, 2, 3. Now, what about these stealth signals or these arrows? This is not a chevron, white chevrons. This is not a sell signal. This is not a buy signal. It's simply a visual aid waving at you saying, hey, we've broken or penetrated below the number 2 low, or we've broken or penetrated above the number 2 high. So if and only if we get a break of that 2 low or a break of that 2 high, we're going to get that chevron print. If and only if we get that break and that chevron print, we're going to get these 4 lines print onto our chart. What are the 4 lines? Well, this blue line is your entry or breakout level. Your red line is your risk or stop level. Your lime green line is what I call TP1 or profit objective 1. Your dark green line is TP2 or profit objective 2. So to summarize, TP1 is the distance between the high of the 1 and the low of the 2 measured down, and TP2 is simply the distance, or 2 times the distance of TP1. Here's that example on gold, GLD. Here's your 1, 2, 3 bottom. breaks above, hits TP1, TP2. Here is that consolidation range. We don't get any type of prints or signals because I'm looking for new highs or new lows. So you can see that we're clearly hunting for a new bottom down here. These green arrows, why are these green arrows? Let me go back here. Why do we see all these green arrows? It's because we're making new lows. It's telling us these are new lows, new lows, new lows, new lows, new lows, new lows. We stop making new lows, 1, 2, 3. We never break above the 2. Get new lows, 1, 2, 3. Never break above the number 2. So we never break above the number 2, hence no chevron, hence no lines. All right, here's the gold. Here's that last 1, 2, 3. Market barely breaks above, so it prints for us, prints the entry, stop, TP1, TP2. You can see we're looking for a new 1, 2, 3 high over here on the top right. Here's Delta Airlines. There's a long, there's a short, there's the short, there's a long. Here's that 5-minute NASDAQ chart. Here's the 1, 2, 3. We break below, we hug that breakout level for a few bars. We hit TP1, we hit TP2 to the tick, and TP2 actually happens to be a new session low, so we get a new number 1 count. 1, 2, 3, market breaks above, hooks back above, hits TP1, doesn't quite hit TP2, but we're close enough for government work, shouldn't have lost money on the trade, and then we trade sideways. Market comes down, we get a new number 1. Why? This low is lower than this low. 1, 2, 3, market just nips its head there above that number 2, triggering the signal, comes back up, hooks back above, hits TP1. While we're looking for TP2, notice that we're getting potential number 1 highs. These are new session highs, so that clues us in that, hey, we may need to get ready to reverse our position. But we do end up happening to hit TP2, and we get a new count. 1, 2, 3, market breaks below the number 2. We break down, comes back up, hooks back down, it's TP1, TP2, and then we get a new number 1, 2, 3 bottom count here on the bottom right-hand corner. So is this trading for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the paralysis analysis, the indicator overload, just want to add another strategy to what you're already doing, whether you're successful or unsuccessful. Or if you want a very step-by-step mechanical plan that you could do even part-time, this could be for you. This could be for you. And I like to stop and tell just a very short story here. When I had this indicator built out for me, I brought my wife down to my office who teaches ballet part-time. Also brought my 2 girls down who were like 4 and 5. Trust me, they don't know a flying flip about the markets. They don't even know what the heck I do, even after all these years. And I showed them what I was attempting to do. Of course, after they got settled down after seeing the candles and the colors and this and that, they got it. They understood what I was attempting to do with what I just showed you. So my point is if they can understand it, then you certainly can too. We don't remember, or most of us don't remember kindergarten, learning our primary colors and learning how to count to 3, but that's basically all you need to know with a dash of common sense. So I do have a very special offer for today's workshop attendees, and I do limit this to 25 people. Why? It's not some type of marketing trick. It's because I am a real human being and I manage and monitor my own inbox. I do have a support team, but I read everything that comes in. I love to communicate with our students and members personally and get your feedback, and it's part of the process. So the special offer is, it's the 3S code high-low indicator and scanner. For Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Yes, we had it built out for all 5 of those platforms. Also going to get a chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. If you don't know what that is, I'll show you what that is momentarily. So what is the 3S code high-low indicator and scanner, you ask? Let me refresh your memory. This is the 3S code indicator. So this is a daily chart of Crude. You can see here we have a short, and then a long. Daily chart of Bank of America, BAC. Here's your long, here's your long, here's your long. Here's the daily chart of Love, LUV, Southwest. Here's the short, here's a short. Whoops, bad trade, losing trade. We get stopped out. We get another chance to short this market. And then why do all the work when you can let technology do the work for you? This is a screenshot of my Thinkorswim platform where I'm scanning the markets, scanning for 1, 2, 3 tops in the Russell 1000, only stocks that have options on them, $20 a share or greater. I hit the green scan button and voila, I get my results handed to me. Also a screenshot of watch list. I have one monitor dedicated to watch list where I'm scanning multiple markets across multiple time frames all at the same time, and you can do the same thing. We've been looking at the Thinkorswim platform. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanner component. This is what it looks like on NinjaTrader 8. Here's your indicator component. Here's your scanner component. Here's what it looks like on TradingView. So a 4-hour chart of Apple, there's a long, and then there's a long, and a indicator on MT4. So your 4-hour of the Euro Kiwi, there's your long, there's your short, and then there's your long with some moving average components. So full disclaimer, there is no scanner available on MT4 or TradingView. It just doesn't exist, but I'll tell you, if you know a Russian programmer that you want to introduce me to, please do so, and we'll have that puppy built. But right now, you get the indicator for all 5 of those platforms, but the scanner component is only available on TOS, TS, and NT8 at this time. So we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a daily process. I'm letting the software scan the markets for me, locating the setup. I go to my platform for entry, and then I manage the trade through the exit. And you can start doing so today with the 3S code. So here's your special offer. It's a 3S code high-low indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get a chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, no joke, we've recently offered this on the internet at these prices, $19.97, $14.97, and $9.97. But for this live workshop special, we're pleased to offer this for a one-time fee of $397. So one-time fee, you own the indicator, scanner, and bonuses for life, and as well as support. So let me put that into the chat box for you. It's seasonalswingtrader.com/code. That's your special offer link, and you get access to this for a one-time fee of $397. So let's talk about the indicator scanner again. It's going to include a visual plot of the 1, 2, 3 top and bottom reversal areas. You're going to get an entry, exit, stop, and target levels, all color-coded for easy reference. Customizable settings. If you don't like red, you want hot magenta. If you don't want lime green, you want puke green. You don't want arrows, you want dots. You can change that. Multiple look-back periods. That's what I mentioned earlier. If you want to expand the value out to find less trade opportunities, or make the value less to find more, you have the ability to do that. You can scan for setups only, meaning those that are in the process of setting up, or trigger only, meaning those that have actually broke above the 2 or below the number 2, or both. You can scan for tops, bottoms, or both at the same time. Scan for intraday setups, swing setups, position type setups across multiple asset classes and time frames, again, all at the same time. Bonus 1 is a chart pattern principle trading manual and guide. It's a 90+ page PDF manual that you can download to your desktop. You can print out, use for firewood. I don't really care, but you're going to learn how to read charts, how to identify trend and range markets. You're going to learn additional strategies, option strategies, chart patterns, seasonal trends, and more. Bonus 2 is 25 top option strategy guide. Literally strategies for all account sizes, whether you trade puts, calls, or to more intermediate advanced, such as condors, verticals, butterflies, diagonals, and more, there's a strategy for all styles. Bonus 3 is access to our private Discord channel. This is something we just introduced about a month ago. We're very pleased to have this. It's not a trade room, but it's more of like a 24/7 chat room where anybody can come in and, or not anybody, students, but any student can come in and post charts. They can post analysis. They can do anything that's helpful for us as like-minded traders and individuals. So if you want to post charts or say, hey, what do you think about this? What do you think about that? It's a hub for us as a community to come in and all help each other out. So we're very happy about that. Here are some unsolicited testimonials. I don't ask for these, they come in all the time, but I'm very humbled and most importantly, pleased and happy to see that people are making profits and trading with the 3S code. And here's an example of one of our alerts that went out only using the 3S code. These were purely based off the 3S code. You can see these trades here in crude, unlead, pound, euro, nat gas, and more. And then I do eat what I cook. So this is a screenshot of my Thinkorswim platform where I've got my equity options trades, and then my futures platform where I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And then finally, just to kind of wrap up here and conclude with just one more example of a nice, easy, clean 2-point trade setup in the E-mini S&P. So here is the offer once again, 3S code. The offer link is seasonalswingtrader.com/code. And I've got a lot of questions here, so I'm just give me a couple minutes. I'm gonna, just give me a few seconds actually. We scroll up here and want to make sure I answer everybody's questions. Yes, we will look at some charts. Yes, Sylvia, we did record, but I cannot guarantee that the tech gremlins will cooperate. Amazon did it today. Look at 5-minute chart on Amazon. Okay, I'll take a look at that. There's a one-time fee, Neil, let's say one-time fee. Hidden renewals, no auto rebilling, no charges, no tomfoolery or shenanigans. Dave, we don't really offer a PayPal, but you can email me support@seasonalswingtrader.com. We'll see if we can work with you. All right, sorry about that, Ray. Sorry about the sound, but it seems like we're good everywhere else. I mentioned I trade options. Well, how do you trade options? So I'll show you, we'll look at some examples, but basically when the 1, 2, 3 pattern triggers and we get, the confirmation that we do want to move into our expected direction, my preferred method is credit spreads. So I like to sell call spreads, sell put spreads. There are occasions, you have a time and place for all. There are occasions where I'll, buy outright puts, buy outright calls. Just depends on, kind of the current market environment, the setup, really my outlook on that particular situation. So again, it's just a lot of different moving pieces there. If you trade options, you know that. No, it's not a trade room. Yes, absolutely. We provide support. We do not leave you hanging. We don't feed you to the wolves. We take care of everybody. We do have tech support. Actually, my guy can he can actually log into your computer and do a remote session where he can actually install the indicator and scanners for you. Honestly, this is good question, good time to bring over the members area. So let me do that right now. All right, so this is the Discord channel that we talked about, or that I was talking about, where we're posting, different setups here, futures, Forex, stocks, and anybody can come in and post their own commentary, outlook, things like that. Members area, this is your Discord information where you can find out how to access that. And then if you scroll down here, here's all kinds of resources and additional help guides that I didn't even mention, but how to customize the indicator, setting up scans and watch lists, day trading, swing trading, all that good stuff. Here are your downloads, Thinkorswim. So we've got a PDF manual here. Here's a video guide. Also did a little 5-minute video on adding the seasonality widget. It's a free seasonality widget in Thinkorswim. When I do swing trading on equities and commodities, I like to use seasonality. I am, after all, seasonal swing trader. Certainly not necessary, and I don't use it for when I day trade. Here's TradeStation, V10 and V95, NinjaTrader 8, TradingView, and MT4. All right. So yeah, we've got video guides inside the members area. Yeah, so you get access to all those platforms. We don't limit you to a certain license to one platform or the other. You get access to all, and I think, Robert, I'm answering your question right now. You can load that on both Ninja and TradeStation. Yeah, absolutely. Yeah, I appreciate everybody that says they're in. I look forward to seeing you in the members area. If you should receive your welcome email pretty much, instantaneous. Maybe give it a minute or two. If you don't receive it in 5 minutes, maybe check your spam or junk folder, but that's usually not a problem. Yeah, Barb, you can email us at support@seasonalswingtrader.com if you need help. But if you guys are here today, you're able to log into the presentation, shouldn't have any problems at all. But look, I'm not a tech wizard, no tech guru myself, and I understand we all run into snags from time to time, so we're happy to do that. No, support doesn't really end. I mean, you get support for life, and when I say life, I got to be careful with that, because unfortunately I won't be around forever. But as long as I am and we're supporting the product, you get access. So if you want to download it and trade with it and go your merry way and never speak again, you can do that. I hope that's not the case, but you can also, you want to give me a shout out in a year from now and say, hey, what's going on? You can email, or if you have problems, need to load it on another computer, no problems. No, this is not an alert service. This is an indicator scanner package. As far as the scanner goes, Bill D, is your scanner is going to be, in its results are all going to be dependent on what inputs or parameters you choose. So everybody's, probably looking at different markets. Some are maybe scanning across the NASDAQ. Some might be scanning against weekly options. Some might be scanning against FX, some futures. Some might scan against a 10-minute time frame. Some might be a 4-hour or daily. So that will, $20 a share or greater. Maybe you're looking for penny stocks. Everybody will get different results based on the scanner. As far as the indicator goes, and let me bring up a chart. One moment here. All right. All right, so do me a favor. Can you, does everybody see the chart here? Everybody see the chart? This is a daily chart of copper. All right. So we're in the middle of a potential 1, 2, 3 top formation right here. But what I was saying is, so like the settings, here's where you go and adjust your settings. This is, if you want to change, line to a hash or square, change the colors. You can do all that, whatever platform you're using. This right here, these are out of the box black and white settings. I have these settings based on just basically the bare none. I mean, the lowest level. Why? Because I want to see every setup. I want to see every 1, 2, 3 setup up here. Doesn't mean that I will necessarily take those, but I want to see everyone that appears, and then I'll use my own judgment. There's no way that myself or anybody could take all signals. Way too many markets out there, way too many time frames. So yes, I do look at them independently on the markets that I'm following and the time frames that I follow, and then I'll make a judgment. I'll determine whether or not I want to take that trade. And I talk about that inside the members area. There's very specific things that I'll look for. You can trade, as naked as you want, not have anything on your chart, meaning no RSI, no moving averages. It can be completely naked, and that's fine. I get it. I like it. But I've added a few things that help me, because that's what I found out that works for me in my trading. So if you download and install right now, what you see is what I see, what I see is what you see, unless you start, coming down and changing all these settings, meaning like, well, I want to see at least 3 bars between the 1 and 2, or I want to see at least a 25% retracement, so on and so forth. And yes, I do like to see more bars between the 1 and 2. I do like to see, like right here, we have only 1 bar. We have a 1, and then a 2 and a 3. I like to see more bars, but it doesn't mean that I'm going to avoid the trade. But I do want to see it. If I had chosen that I want to see at least 3 bars, I wouldn't have seen that setup. All right. I hope that makes sense. How do I use the RSI diversion? So right here, we have a new number 1 high right here. And that RSI is 93. Well, that's not a good example. Let me see. So here's a pretty decent example. Actually, we'll see it probably better on an intraday chart. But this is okay. So we have a low. This is the lowest low, and you can see where the RSI is. And then if you go back here, we have a low. You see the RSI. So we have the low. This is about the lowest RSI point that it can get, but we have a newer low. And this RSI print is higher than that. That's the divergence aspect. All right, so let's see what happened in today's action. Yeah, no problem. Yeah, William and Gail, yeah, you can email me at support@seasonalswingtrader.com. So nothing on the daily chart of S&P until we get new highs, or we take out these March lows. You can see the last 2 setups look very similar to copper. These are textbook trades here. I love these trades. So many profits to be had here. Let's go to the 5-minute chart of the S&P. So here we are right now in the Asian session, and we're in a long trade. We only have 1 trade set up today. Perfect trade set up here right before the cash open at 32.67 with a move down to 61. Nice little $6.300 trade there. Crude oil. All right, so 1 trade. We had a trade right here this evening, and then here is the 5-minute chart. So a couple things that I like to do here. So these averages, these shorter term averages are just a 5 and 21. This purple is a 200-day. So remember I told you about the common sense aspect. I do not short into 200-day support, nor do I trade into 200-day resistance. These 5 and 21s, they don't override my my entire bias on a trade setup, but I like to see the 5 and 21 have crossed before I go short. And I'd like to see price action below the 5 and 21s or above the 521s for a long. So I hope that makes sense. Yeah, so I had a student reach out to me about looking at a 233 tick chart. And man alive, the 233 tick chart works like gangbusters. And we got a trade set up right now. So we'll kind of look at some examples from today and just notice, I mean, they go up a lot of oftentimes to that TP1 level and often reverse. So here is one where we basically went up to 50% of the profit objective. And that's where, you know, how you manage your trade, your risk and all that is ultimately up to you. I mean, we've come up here from 4190 up to 4196, 97, but it's 50% of the profit objective. 50% of the profit objective and then trade lower. Here's another one where the kind of 200-day was lurking up above. Comes up to TP1 and then sold off. Comes to TP1 and bounced. Continued to trade lower. So yeah, really good stuff there. Let's see. Look at Bud. Anheuser-Busch, I believe. Yep. But yeah, so didn't quite hit TP1 there, but a lot of, you know, good profit there from 46.80 up to 61.90. And I don't have, for some reason, I don't have the newest version, I guess, on that, but you can see we had these labels, these new labels. So you got it's print. It gives you, shows you the entry, stop loss, TP1, TP2 over there. Let's see, Bud, Zoom, ZM. All right, so good eyeballs. We're looking for a 1, 2, 3 top here in Zoom, and we're looking to short on a break below that number 2. Your target will be the distance between here and here, measure down, so you hit TP1 somewhere in that area. PayPal, same thing, very similar thing. So these are the last 2 trade setups. No, there's no repaint. 1, 2, 3. So we're looking to get short on breaks below there, around the 163 area. MGM and WIN. So that was the last setup back there in March. Nothing, would not get any new setups until we take out these highs or these lows. So we had two subsequent winning trades there. Win. Nice short trade there and win, and then a long. So nothing going on there. Euro Swiss. All right. Euro Swissy. Oh, the 1 hour. Yeah. So see, like, yeah, we never broke above the number 2. That's why we get no print, and we get a new low. This low is lower than that low. Here's that perfect example of divergence. This is a great setup, by the way. So we have this low, new number 1 low. Look, all right, let me just draw it out for you. So we have a low and a low. So we have higher. No, what am I doing? What am I doing? It's almost like a double bottom, but that's a lower low. This low is lower than that low. So we have lows and then higher lows right here. So we've got that. Then we've got the 521 cross, and that's you don't have to use those rules. And then we get the break above, and then the retest, and then move back up. So this is a trade I would have taken, and I said I don't trade in 200-day resistance, but the 200-day is all the way up here near TP1. If that 200-day was kind of creeping right here down, I would wait for at least the market to bust up above the 200-day and possibly retest, and then back higher. I would have given up some pips, of course, but I would rather do that than than trade into it and then have it reverse. But that's just a little thing that I've added. 1 hour. So here's the 1 hour, and we've been into decent profits. So again, 50%, and then up, and then trade back up against, and then back down to back 50%. Again, 50% of profits. That big green arrow is just something else. You can ignore that or disregard it. OPK, not familiar with it, but I'll certainly check it out. OPK. So just making new highs. We're looking for a new 1, 2, 3 top. You said Amazon on a 5-minute earlier. So here is a 1, 2, 3 top in Amazon. And notice that we broke below that too, but didn't get a close. We just kind of sucker punched shorts into getting in. So I would want to see a move back down, get a close and a retest, and a move back down to 25.62, which would be awesome because that's going to take us right into price structure right around in here. It's a perfect target. That happens a lot. Look at the 5-minute as per your suggestion. And so we had right up to TP1 reverse. So nice little move from 31.50 up to 31.86. Congratulations if you took that. There was something that was carried over from post-market into pre-market. Would have taken that. Yep, you're welcome. All right, gang. I think I guess I'm about 15 minutes over time here. And first off, I want to say thanks for taking time. You're welcome, Stephen. I appreciate you spending time out of your day. I love this stuff. I could talk about it all day long. I love looking at these markets and these charts. It's what I do all day, every day. I live it, eat, breathe it. So if you have any questions, for those that you've jumped on board, congratulations. Send me any questions you have. If you're kind of on the fence or have some questions later on that may come about, you can also email me. I'm happy to answer those. And I love communicating with each of you. So appreciate your time. Hope you learned something. Hope you start to incorporate this into your trading, add it to your trading arsenal. It's really good stuff. It works. I've been using it for 15 years. If it didn't, I wouldn't be talking about it, trust me. So I've seen all the shiny indicators and shiny objects out there, as I'm sure you have too. But I would seriously consider taking a look and being part of the community. So you're very welcome, guys. Y'all have a great rest of your day wherever you are in the world. Have a good evening, good afternoon, good morning, and I look forward to seeing everybody on the inside. Take care and hope to see you soon.